Hello everyone, welcome to the video. Today we will be talking about the four main stock market order types, which includes the market order, the limit order, the stop loss order, and the stop limit order. This video would be geared towards beginners, so if you are new or getting started buying and selling stocks, I think you'll find this video helpful. And I'll tell you right now, the order that I use the most is the limit order, followed closely by the stop loss order. So let's get right over to the computer screen.
Alright, so before we get into the different order types, I want to show you guys where to go in to put in the order type. So I am logged into my brokerage account in Fidelity, and now we click on trade. So that pops up the trading ticket. I will be blacking out some information such as my account number, etc. But if you pay attention to this trade ticket, you'll see here you could populate the symbol. Let's just put in Apple as an example. The market is closed now, but that's not important. Let's just say action, buy 1 share in quantity. And here in the order type, this is where we put in what kind of order we want to put in. Market order, limit order, stop loss, stop limit. And then there are some more advanced orders here as well. So now that we know where we go to put in the order type, let's dive more into the detail into these individual order types. So the first one that we're going to look at is the market order. The market order guarantees immediate fill, but not the fill price. So fill prices using market orders may be unfavorable. So let's discuss it a little further. When you put in a market order, what it tells the market or the brokerage is that you want to buy or sell that stock. You want your order to be filled immediately, but it doesn't matter at what price you get it filled at. So usually you get filled at the current market price. So you put in this order when getting filled on the order is more important than getting your desired price for the order. Now, this could be for a buy order or a sell order, it does not matter. Say we are trading Apple, and just as an example, Apple is trading at $110. And if you want to buy Apple immediately, you would put in at market order. And whatever the market price is at that instant, you would get filled for it. So if it's 110, you'll get filled at 110 or very close to that price. Maybe it could be 109.5, could be 110.5, but you put in a market order when you're not too concerned about the price and you just want to get filled immediately. The next one, which I use quite often, is the limit order. So a limit order will guarantee you the price that you want to buy or sell it at, but it will not guarantee that your order will get filled. So the limit order executes the trades at the specified price or better. So fills may not occur until the asset can be filled at the specified price. Let's take a deeper dive into this. So let us look at the Apple share example again. So if we are going to put in a limit order, say Apple shares, they're trading at $110. We put in a limit order when we want our trades to be executed at a certain price. Say we want to buy Apple shares, but only at $100. So we put in a limit order and we put in our limit price as $100. This trade will only get executed if Apple shares can be bought at $100. So you know if you put in a limit order for Apple shares at $100, you will not pay more than $100 per share. That is guaranteed. However, they do not guarantee that your order will get filled. For instance, Apple shares may never come down to $100. If it's currently trading at 100, it may come down to 108, 105, 104, and then it goes up again. So if Apple shares never come down to $100, your order will never get filled. So that is the risk you take by putting in a limit order, but you know you will never pay $100 a share for those Apple stocks. I hope that makes sense. So let's recap one more time. You put in a market order when getting filled on the order is more important than getting the desired price. You put in the limit order when getting the desired price is more important than getting filled. And the reason I use the limit order is because I can control at what price I get in the trade for, thus controlling the risk I take going into the trade. So that is why I use the limit order the most. And to put it into perspective, limit orders can be used for both buy or sell orders. So if you are using a limit order to buy a stock, let's use once again the Apple example. If Apple is trading at 110 and you put in a buy limit order at $100, you will get filled at $100 or lower. If you put in a sell limit order for a stock, say at $105, your stock would sell at $105 or greater. So either way, you're guaranteed your limit price or better, whether you're buying or you're selling. So the next order is the stop loss order. This order executes as a market order when the price of the stock goes below a certain price. It doesn't necessarily have to be at a loss, and it's used to stop losses or protect profits. So when you put in a stop loss order, usually that means that you own the stock and you want to either stop your losses or you want to protect your profits. So once again, we'll use Apple as an example. You own one share of Apple and you bought it at $100. Currently, the stock is trading at $150. You could put in a stop loss at $130. So when you put in a stop loss of $130 and Apple shares are currently trading at $150, if Apple shares ever fall below $130, it would immediately turn into a market order, which means it would immediately tell the brokerage that, hey, sell my stocks at whatever the market price is. And it will tell the brokerage that when the stock price goes below $130. Now, it does not guarantee that you will sell the stock at $130 because, let's look at it again, the stop loss order becomes a market order when that price is reached. And if we review what a market order is, it guarantees immediate fill, but not the fill price. So it does not guarantee the $130 that you'll get filled at $130, but it guarantees that that's when your trade would be triggered. And it should be around the $130 range unless the market is moving really fast. If the market is not going crazy, you would get filled somewhere around $130. But if the market's moving really fast, the Apple stock is crashing. Let's hope that never happens. But if that is the case, then you might get pulled out of that trade at a lower price than the $130 stop loss price that you put in, but that is less likely. I would also like to mention that it doesn't necessarily have to be at a loss. although the name of this order suggests stop loss. For instance, the example that we were looking at, you bought the Apple stocks at $100, the share is currently trading at $150, and you put in the stop loss at $130. Even if you get filled at $130, you make $30 profit. You're not selling it at a loss, which a lot of people think that a stop loss order has to be at a lower price than the price that you bought it, which is not true. You can use stop loss to protect your profits as well, like the scenario I just explained. Finally, the stop limit order. This is a more advanced order than the stop loss order. So the stop limit order executes as a limit order when the price of the stock goes below the certain price. Doesn't have to be at a loss. A more advanced version of the stop loss order, and you get to set both the prices. So in a stop loss order, when the stock goes below your stop loss price, it becomes a market order. Whereas here, once the stock goes below your stop loss price, it becomes a limit order, and you get to set what that limit order is, or that limit price is. You set both prices. So it may seem a little confusing, so let's look at an example. Once again, say Apple stocks, you bought it at $100. Currently it's trading at $150. You put your stop limit order for the order to execute, or the order to be triggered at $130. That's your stop limit order. But the limit order, say, is $129. Okay? So what you're telling the brokerage is that execute this order when Apple stocks go below $130, but do not fill this order at lower than $129. Okay, so assuming this is a sell stop limit order, you will not get a worse price or a lower price in selling the Apple stocks than $129. But keep in mind, that also doesn't guarantee that you will get filled, because if we go back and see what a limit order is, it guarantees the fill price, which is the $129, but it does not guarantee the fill. So it's important. That's why I really don't use the stop limit order too much. I prefer to use the stop loss order, where the stock price, if it goes below my stop loss, it would take me out of the trade at the market price. And it's very important if markets are moving up and down, or I usually put in a stop loss order where me getting out of the market is more important than getting the desired price. So that's where I use a stop loss order as opposed to a stop limit order. Okay, so let's look at the summary. If you are putting in a market order, you are telling the brokerage to buy or sell the stock at the current price, and you have no control over the price. If you're putting in a limit order, you're telling the brokerage to buy or sell at the price you specified or better, and you have full control over the price. Does not guarantee execution, but you do have full control over the price. Then the stop loss order. You buy or sell when the price reaches a specified point, and you can specify what that price point is, but once it's triggered, you get no control. It turns into a market order. In the stop limit order, the limit order is activated at the specified price, and you have full control over it. When the order gets triggered and at what point it gets executed, you have full control over the price. But once again, you don't have control over if it gets executed or not. because that is dependent on the limits that you set. So once again, the two orders that I use the most are the limit order and the stop loss order. This is not a recommendation that you use these two orders as opposed to the others. It depends completely on your investing and trading style and what you're comfortable with, but just wanted to share the two orders that I use the most with you guys. So I put in the summary here for you guys. If you guys want to take a screenshot, feel free to do so.
All right, so those were the 4 key order types. Needless to say, there are a lot more order types. They're just not as common. There are different combinations of these. There are conditional orders and way more advanced order types. But if you know these 4 order types, that should be enough for you to get started, get going, and eventually you could, dig deeper and find and learn more complicated order types. So if you found this video helpful, give it a thumbs up, and if you like contents like this, you might want to consider subscribing to the channel. I have created another video for beginners where I show how to buy or sell your first stock, and it should be available on my channel. I'll try to link that somewhere in the video or in the description. So thanks for joining. I'll see you guys in the next video. Bye-bye.